You think about these earnings. Was it just that analysts and investors were so off on this? How are we supposed to even think about this given the pandemic?
Indeed, Nike did miss earnings and revenue, but I think what's more powerful is the message that they conveyed during the earnings call, that they are positioning themselves for the long term, and they have learned from what has been going on in the pandemic, and they're using those strategies to better position themselves. Our latest Refinitiv consumer sentiment is telling us that consumers are still missing experiences. Experiences are very important to them, and health and wellness is on the top of their minds. And Nike did just that in order to gain new consumers through their digital platforms. Through the Nike training app, they were able to gain significant new customers in China, where the coronavirus first hit. And as a result, that translated into strong sales in China that helped offset the weakness of the 90% stores that were closed in North America, Europe, and Latin America. So that tells us that Nike is learning that because they said that going forward, they're going to be investing heavily more on these experiences and these memberships in order to cater better to the consumer, which in the long term will be a better strategy of those loyal consumers that they're gaining right now.
I got to ask you a question, which is what percentage of their business actually comes from the Nike-owned stores, typically?
Right. So in North America, it's about 41%. Now, when you combine the three areas that were closed, which is Europe, Latin America, and North America, that would have been 80% of their revenue. So when you take into consideration the number that they posted based on the strength in China, which again was the first place hit, so it's telling us about the recovery, then you look at those numbers closer in a different perspective and say, you know, Nike is a very strong brand, and they're positioning themselves with the direct-to-consumer strategy very well. In fact, they said consumer behavior is changing. Well, this is a stock that
what do you think the stock should be
a year from now will probably be. Well, that's why when strange times like this, when you look at the smart estimate, this is a company that has a strong balance sheet, and the leverage, when you look at liquidity, it's very well positioned to go to last not now, but just a couple of more years. Right. So I think that the stock still has room to grow.